cord to the computer. Okay, so that is what we're going to be doing. So I should be sharing with you guys, and so you should be able to see my course outline that I've come up with. And in here is all of your assignments and everything we're expecting you to do. So I have that there for you. I'm going to go ahead and click out of that because I've already showed that to you. Here's the welcome letter, and that's from me. Just saying, hey, my name is Chris Duke. Like I said, I have a lot of years in accounting, and I have a lot of years teaching and actually working in accounting. I have here at Arizona Western College, many moons ago, I like to joke around, many moons ago when Moses parted the Colorado River, which Colorado River is here in Arizona. It separates California and Arizona. Anyhow, I was just joked around that Moses would do that for me. And Moses was actually one of my bosses. So, I've got a kind of a strange sense of humor. Um, I went to Arizona Western College. Thank you, Tina. I went to Arizona Western College as a student, and I am an alumni of Arizona Western College. I'm also what we like to call first gen students. I'm the first one in my family to get a degree. I have a Bachelor of Science in Accounting. I have a Master's in Business Administration, and I also have a doctorate in Business Administration in Advanced Accounting. My favorite thing to talk about is fraud. I love discussing fraud. My dissertation was on fraud. It makes me happy. I find it absolutely fascinating.
Oh,
And so that's just kind of what I wanted to tell you guys. That's about me. I've got three children. I've got two boys and a daughter.
actually,
I have two grandchildren, which makes me super happy. I have an 11-year-old grandchild and I have a 3-year-old granddaughter. So my grandson spent the summer with me in Yuma, Arizona, which you all know is Southern Arizona. Um, I don't know why he wanted to spend it with me, but he did. We ended up going to SeaWorld and we did the beluga whale experience. I even have a picture of me kissing a beluga whale. Um, he spent a lot of time. We went to Balboa, but we did a lot of stuff in San Diego because we're so close to you guys. So it's just easy for us to go on over. Except for I-8. Stupid I-8 is down going eastbound. I do not like that. You have to wait like 3 hours just to get through that mess. So I went the back route through Ramona and up through Julian. Yeah, you can tell I've lived here a long time. So that's kind of it about me. My parents are Vietnam veterans. My father served 3 tours in Vietnam. They met when they were both stationed in Washington, D.C. My mother decided she was going to get married. He was her victim. And then she decided she wanted out of the military. So she got pregnant with me. So 1 year, almost to the day after they got married, I was born. So she planned that well. So anyhow, so that's just kind of my deal. We've been stationed in San Diego, Adak, Alaska, Long Beach. Those are the places that I remember. And then he moved us here when we were really young. He was almost out of the military when I was born. So he moved us here young and when he wanted to retire. So that's basically who I am. Does anybody have any questions about who I am? No? And it's okay if you don't.
no thanks.
Not yet? Okay, maybe tomorrow. Okay. One of the things that now I'm used to working with Cengage now. Like I said, I've been professor of accounting here at Arizona Western College. I've revamped the entire accounting degree here. I'm really good with Cengage. This is not a Cengage product. It's a McGraw-Hill product, which I'm fine with. It's just not my favorite learning management module. Okay. It's not my favorite, but I'm fine with it. What I like about Cengage is that it has the option so that when you guys are doing your homework, you could say, email my instructor and it would send me a picture of what you're working on and it give me a direct link right into your homework. But I can still do that with with McGraw-Hill. We're using a Connect program. I know there are ways that you guys can get a hold of me. If you have questions about your homework, please send me in an email. Not a problem with answering those. I do have some office hours. I do have scheduled on a Friday. But for the most part, I'm trying to do Tuesdays and Thursdays in the kind of like middle of the evening so that people can make it there, because I know everybody's working and I'm trying to come up with a time that's best for everyone. So this is what I kind of came up with. Okay, so there's my welcome letter. So let me come out of here. This is what I think I already showed you guys this one. I did. Let me come over here to the course calendar. This is what I'm sorry, I made it pretty. I like everything color coded, and that's how I have everything. So you can see exactly what's going to be due on week 1, week 2, week 3, week 4, your discussion questions and whatnot. I'm going to leave the coming to the Zoom classes up to you guys. They say we're supposed to be doing them, but as you can see, I think I have like 30 some students, and I have 5 students that showed up right now. So I have a feeling that may be some questionable activities there. But when we do come to Zoom, like if you guys have questions over your homework, if you want me to explain more things, I'm more than willing to do that. If you want me to go into lecture, I'm more than willing to do that. I am going to be adding something to your classroom because you're going to be working on chapter 1 and chapter 2. Chapter 1 is basically showing you the effect of economic activity on the accounting equation elements. The accounting equation elements is assets equals liability plus equity. Those are those are the elements. In chapter 2, we're going to expand that. We're going to move revenue and expenses out from underneath equity, and we're going to create them as part of the accounting equation. We'll call it expanded accounting equation. Assets equals liability plus equity plus revenue minus expenses. Revenues and expenses are what we call temporary nominal accounts. We will close them out at the end of the closing period, and we'll start the new year with a zero balance in those revenue and expense accounts. So that's kind of where we're going with this chapter. Does anybody have any questions? What are you expecting me to do for this Zoom class? Do you expect me to lecture? Is that what you typically get?
I think like going over some basic fundamentals and what assignments are expected would be nice.
Okay. So
Yeah.
so you would like to see the assignments?
For instance, like the discussion post, what we are expected to do, like the standards.
Okay, there should be a rubric there for you on your discussion post. But let's double check. Okay, so this is what I'm expecting you to do. So I already have somebody who's already come in here, and I believe that she or he is already here in the classroom. So what I always like to do is I like to know like who you guys are. Here's student introductions. What is your major? How do you think this class fits into the career you've chosen? This discussion, have you ever worked in accounting? Do you currently? And I've got 16 posts here. I'll probably go in here and respond to you guys, but this one is ungraded. That's the student introductions. But let's get right over here to this one right here. Okay. This week contains multiple discussion questions that you're required to answer. As a small business owner in today's economy, what 3 financial reports would you use on a regular basis? What information would you find on each statement? What decisions might each statement help you make? Please provide more specific examples. Okay, so this is 20 points, and what I've asked you guys to have your first discussion by Thursday, and then your 2 responses by Saturday. So I'm looking for well thought out answers. I'm not looking for, I agree, good comment. Those type of comments I'm not looking for. I'm looking for something that's going to add some substance to the discussion question. Looking at this, I'll just kind of give you a roundabout what I think. Okay, small business owner today, 3 financial reports. There's 4 financial reports that we've got going on that are what we considered GAAP and for external users. In financial accounting, our focus is on the external users. That's the income statement, statement of retained earnings, balance sheet, and cash flow statement. Now, my favorite financial statement to look at, I mean, they're all fine. I'll look at any of them, but what would tell me the most is going to be the cash flow statement. The cash flow statement tells me, where did I get my cash and what did I use it on? And so it's broke down into 3 sections: operating, investing, and financing section. Operating is my day-to-day business activity. Investing is my purchasing and selling of fixed assets, also purchasing and selling of temporary investments. And then financing is my issuing stock, purchasing stock from the market, paying out dividends, issuing debt, which is bonds payable, or paying down my debt, which is bonds payable. Okay? Could be bonds payable or notes payable, either one. So that's where those sections are. And so what I really like to look at is I like to say, hey, where did they get their cash and what did they use it on? Like if I was to go to PepsiCo, okay, I like PepsiCo. So in here, they are a publicly traded corporation. They are managed by the SEC because they like to know me. We're going to go here to investors. And then I'm going to go, usually they have a list of all the reports, but this one's right up in here in the front. I'm going to download this report. This is their annual report. And then I got to go to page like 1 something because it's way in here. This is a report that they have to submit to the Securities Exchange Commission every single year. In fact, they've got one they have to submit quarterly. And that's to make sure that they're not up to any bad fraud. Okay, these are all just notes. I've got to actually look and find the goofy financial statement. It's getting there. There we go. Here's the consolidated statement of cash flows. So right here, you guys can see this is the cash flow statement I'm talking about. Up here, this is my first section, operating. It tells me that I got, and granted, there's supposed to be a bunch of zeros in here. It says net cash provided by operating activities 12507. That's great. Looks very consistent with what's been going on for the past 3 years. And then after that, they get into this. Remember, I said investing. This capital spending is them purchasing additional fixed assets. So what that tells me as an investor, that they're continuing to keep up their fixed assets and replace those fixed assets. Fixed assets are assets that we're going to use over multiple years. We use them in order to help us generate revenue. And that's what's happening right here. You can see them selling some properties, selling some investments, but for the most part, I can see a pretty hefty amount being spent on refurbishing, purchasing these fixed assets, trading them out. And that makes me happy because that means that their goal is to stay in business for a long time. That's what that trend is telling me. Then I'm going to come down here. I'm being very generic. This is my financing. Financing has to do with issuing my stocks and my bonds, as well as long-term debt. And so you can see up here, right off the bat, we're issuing a bunch of debt. This is probably bonds payable. And then they turned around and they paid a bunch down, which is very normal. Short-term borrowings where they're spending their money to go out and borrow money and then try to make money, and then they're paying the money back. That's everything going there. Here's some cash dividends paid out, which is what you get for common stock. So you can see that we have been very consistent in increasing those cash dividends that are paid out every single year. Again, as an investor, this would make me happy because I want those cash dividends. These share repurchases are when we go back out into the market and we buy our own common stock back. And we use that normally to give to our management team as bonuses. Then they have a couple other things in here. And so basically what ends up happening is this cash flow statement tells me how did they get the cash and what did they use their cash on? Because see, they've got cash up here from issuing bonds. They got cash up here from selling some short-term borrowings. Here we're selling some short-term borrow or buying some short-term borrowings. We're selling some right here. Here we're paying down our debt. It just tells me what their goals and objectives are. So that's what I see whenever I see that type of when I see a financial statement. And I know that's not what you were asking me. You're asking me more how you wanted this to be put in. But this is kind of what I've got going on right here is, again, we've got a question. I want you to answer it. I want you to, be very specific. What 3 financial reports do you want to see? What information do you find on each of these financial statements? And then what kind of decisions can these financial statements help you make? Now, one of the things that I love, I like to say, accounting is not math. I do not like math. I do not like it in the morning. I do not like it at night. I do not like it in the evening. It is such a fright. I'm not a math person. I can add 2 + 2. That's great. But that's not what accounting is. Counting is critical thinking. It's memorization. And that's what I get to do in here is it's all this critical thinking skills. I'm going to give you an example. There was a time when I worked retail and I noticed that, and we'll talk about this in one of the later chapters, I noticed that my control account for my accounts receivable and my accounts receivable subsidiary ledger were like $500,000 off. And it was like that since I started working there. And that was one of my goals, is to figure out why on earth is this off? It is not allowed to be off. You don't do that with your control accounts. So I went and I ran my financial statements. Now, there's a couple things that always are interrelated. My accounts receivable and my sales are always interrelated because when I sell goods, and accounts receivable is my customer, they're the people who are buying. Usually there's some type of trend where they're both trending upward or trending downward. They kind of flow on the same wavelength. Same thing with accounts payable and cost of goods sold. So I needed to figure it out, what happened there. And so I ran all these financial reports and I analyzed them to help me find that what happened. And what I did find out was somebody from a couple of positions earlier than me had journaled an entry into the control account, which you never do. That's a big no-no. And they never told anybody. And so it was just being completely misreported. So that's an example of how something I'm going to go in and I'm going to look at those financial statements. My purpose is going to be different. When I'm looking at my accounting records, when I'm looking at my financial reports, it's like I'm reading a story. It's numbers, but it's telling me a story about what happened with this company. And so that's what gets me really super excited about that. Did I answer your discussion question? And they do have, I saw it in here. I saw a rubric in here at some point. I swear I saw the rubric in here. And I will find the rubric for you because I know I saw it in here earlier and it told me everything it told me exactly what the questions I needed to, or how I needed to answer and how much in depth I needed to go. Did I kind of sort of answer your question?
Yes.
Okay, good.
Thank you.
Just make sure you give me a thorough, I'm not, if somebody else writes something about an income statement and you write about an income statement, I just like to see you explain it out. I just don't want to see this, I agree. I notice that happens a lot with students when they're required to do discussion questions. I agree, I found the same answer. Well, that doesn't tell me if you understood anything. It just tells me you're responding. I want to see you actually respond with something of substance. That's my answer for the discussion questions. Okay. And okay, I'm sorry, I keep clicking on it. Content. Content is where I find most of your information at. I'm going to come in here to module 1. You have your readings in here with Connect. I can guarantee that the majority of you probably are not reading. I already know it. And I know some of you are going, yeah, we know it too. I have found over time that people no longer read textbooks. They expect to glean all the information from some of the assignments. And so let me grab some. Okay, so there's the readings. Here's our discussion board. You have to go to the discussion board. Here's the content, smart book. Okay, I'm going to go to the exercises. I'm going to go to homework because I want to see what the homework looks like real fast. I'm going to launch. Everybody should have access to this, and you have access to an ebook. Okay, I'm going to preview what they got. I can see that some people are already working on it. And so this is, okay, I get really involved in it. I love this. And it actually gives me all the answers, which just kind of makes me sad. But that's okay. So identify how each of the following separate transactions affect the financial statements. They're giving us the balance sheet, income statement, statement of cash flows. They're missing the statement of equity in there. Okay, so here we're going to invest $850 in cash and business in exchange for common stock. So what happens there is I have cash in exchange for common stock. Common stock is equity. So I'm going to increase my cash and I'm going to increase my equity. Assets, cash is an asset, accounts receivable is an asset, prepaid expenses are an asset, land, vehicles, equipment, those are all different types of assets. Liabilities, I owe, so off to work I go. This is when I owe somebody some money or when I'm paying them back the money that I owe them. Equity, okay, assets are what we own. Equity here is after we pay off all the liabilities, the portion of the total assets that belong to the
Professor, I'm
Yes.
sorry, can I please rewind you just a minute? When you said that liabilities are the stuff that's owed, did you say that it's what we owe and what people owe us?
No, it's what we
Okay.
owe.
What we owe, thank you.
What we owe. Yes, okay, there's two accounts, accounts receivable and accounts payable. Accounts receivable is an asset. That's customers, and that's when they owe us money. So they owe us. We need to receive that money. Then there's accounts payable, and that's when we need to pay that money to somebody else. Those are our vendors. Where I always like to say, I owe, so off to work I go, because we all know how that goes. So liabilities are everybody that I owe money to and who I need to pay. They're the people I need to pay right now. Okay, does that make sense?
Yeah, the other one didn't make sense, so that's why I asked.
No, that's perfect. I'll answer questions all day long. I love accounting. We can do that. I can do this 24/7. Oh, wait, I do. Okay. I do have okay, I'm just going to warn you guys, I do have a silly attitude. I may sing to you. I probably won't dance, but I do dance in the classroom and I sing and I like to tell stupid mom jokes. So, I'm hoping to make this a fun. I love accounting, and so I'm hoping to give you some of my enjoyment of accounting. I love doing accounting. Okay, so over here, normally they do a grid line with this, but they do it a little bit different, but that's okay. McGraw-Hill can do theirs this way. Okay, so here, received $650 cash for services provided. So cash is an asset. Assets, we're going to need to increase that. And then for services provided. So services provided is usually our revenue account, some type of revenue. If it's a Walmart type business, it's merchandise inventory. We call it sales. This happens to be a service industry. We might call it fees earned, but they're just calling it net income. So you can see here, I'm going to increase that 650 there. It's going to increase my equity because income increases equity. It's also going to increase my operating activities as well. Okay, so they're just wanting to see where all of these fit on these three financial statements. Paid $450 in cash for employees' wages. That's an expense item. So that is going to take away from our net income, revenue minus expenses. Okay, so it's going to take away. It's going to take away from my operating activities. It's going to take away from my equity. It's also going to take away from my total assets because I'm using up that asset, the cash. Expenses, they are part of your equity, but we're going to roll them out in chapter 2 for expanded accounting equation. Here, I'm going to buy some equipment on credit. So what that's going to do is that it's going to increase my assets. It's also going to increase the amount that I owe to somebody else. Notice it doesn't go anywhere in this equity, statement of cash flows, none of that. Purchase $680 of supplies on credit. Oftentimes you're going to hear this term on account. Whenever you hear on account, it's either accounts receivable or accounts payable. This one happens to be accounts payable. So I'm going to buy those supplies. Supplies is a prepaid expense. It goes in as an asset. So I'm going to increase my asset. I'm also going to increase the amount that I owe. Now in this situation, we purchased some equipment. Okay, so we've got this equipment and we purchased it for cash. So I'm going to decrease my cash. I'm going to increase this equipment. And then over here in the investing, because I'm purchasing a fixed asset, it's going to be listed right there. Here we're paying down our accounts payable. So I'm going to use my cash, an asset, decrease it. I'm going to decrease my accounts payable. That's going to come in over here on operating. Provides $820 worth of service on account. For credit, this is a customer. Now we have earned net income and they owe us the money. Okay. They didn't pay us the cash, they owe us the money. That's going to increase my equity. Cash dividends, out the door went my cash. I'm going to decrease whenever I pay a dividend, I'm decreasing the amount of owner's investment. So I'm going to decrease that, and that's part of my financing. And then I collected $845 on accounts receivable. So I'm going to increase my cash, decrease my accounts receivable. And then over here, I'm going to increase the amount of cash that I receive from my customers. So that's kind of that one. Let's see what else we got. Okay, it appears that I have all the answers. It just didn't give it to me blank. It's giving me with all the answers. So here, what they're doing is they're journaling. And this is really nice. So we invested $135,000 in cash along with office equipment in exchange for common stock. So this is a journal. It doesn't look as pretty as the journals that I do, but we'll accept it. I'm going to list all my debits first, then my credits. I'll list these two right here. Cash and office equipment are both assets. They increase on the debit side. Common stock is equity. It increases on the credit side. Here, this is stupid. We don't do this in the real world, just FYI. Prepaid rent. Unless I'm paying 5 months in advance, this is just rent expense, but we won't argue with them yet. So we got the prepaid rent, which is we call it prepaid expense, which is an asset. Assets increase on the debit. Out the door, That's an asset. We're going to decrease that asset. It's going to be credit. And they just go through that and they just complete all the transactions. What do they do next? Acquire two. Okay, then they have you posting into what we call the ledger, which this is that increase on 100. I don't like the way they do these. I so like Cengage so much better. You guys will hear that from me the whole time. So where did I get that $135,000? I got it from right here. Then I spent $7,200. And then April 6th, so on and so forth. We always have a running balance. You see accounts receivable, they have the entire thing. Service revenue, my expense. Let's see what required 3 is. Then this is what we call an unadjusted trial balance. And so what we do is we look at whatever's left here, 106, 100. We know that's a debit balance. I'll put it right there. Accounts receivable, then all the way down accounts payable, common stock. This is my dividends, that's revenue, and that's my expenses. You're going to put it on the normal balance side, and you guys should have all of this in your lecture as well that the textbook is giving you. Okay. Complete. Use the information in each of the following separate cases to calculate the unknown amount. Okay, we had company accounts payable of 162,000. You purchased on credit 291,000. Determine how much cash was paid during, okay, and I'm seeing, okay, here's my beginning balance. I know I purchased 291. I know my ending balance is 137,500. So what do I do? 162 plus 291 minus whatever this is equals 137,500. You solve for the unknown. You do the same thing here. This one is accounts receivable. So here's my beginning balance. This is my sales on account. This is what I have remaining. So obviously the difference here is how much, what the customers paid. And so those are the questions that they are going to ask you. Let's see the same thing here. Beginning balance, my cash receipts. Here's my ending balance. So I must have spent 113,150. That makes pretty easy sense, doesn't it? I hope so. Okay. One of the big things I wanted you guys to see, even though it's not McGraw-Hill, I went and I opened this up. This is my YouTube channel. Yeah, I got 102 subscribers. I'm waiting until I get to the 10,000 mark. I've only had it for like 3 years. I'll get there soon, right? Okay, that's me being silly. So, for the most part, okay, there are a ton of videos in here. Somebody tried to argue with me saying there's no videos. Oh, yes, there are. There's tons of videos. These just happen to be something that I've made for my other classes. Okay. So what happens here, and what you guys can do, and it's always at the bottom, is I have a class that's very similar to what this class is. It's called 211. And you can come down here to the 211, which is way down. See, I told you guys I have a ton of videos. Okay, actually, you know what? I don't want to go, never mind. I don't want to go that way. I want to go this way. I want to go to my playlist. Okay, I come down all the way down here. You can see here's my chapter 6, here's my chapter 5, chapter 1, chapter 2. I can guarantee you it's going to be the same lecture. And in fact, I'm working on trying to create a lecture for this, for you guys, especially for chapter 2. Because in here, and I do have it. You guys don't want to change a grade card. Did I put it in here or did I put it over here? No, that's not the. I'm looking specifically for my two, I can go to Enveda. Okay. So this, and I'm going to add this into your classroom. This is my cheat sheet. I created this a billion years ago. How many people are actually studying accounting? Do I have anybody who's studying accounting for good?
Super.
I am.
Like, you know how like you
Okay, I've got one person. Okay, good. So this is my cheat sheet here. This here is the accounting equation. This is the expanded accounting equation. We won't get into this until chapter 2. But here's my assets, my liabilities, my equity. These three are permanent real accounts. They're also on the balance sheet. Now, under equity, we normally have these two elements, but they roll up underneath equity. But for now, I'm going to roll them back out and I'm going to list them as my temporary or nominal accounts. These are my income statements. This is what's found on my income statement. Now, in here, these are my elements. Underneath each element is a T account. That T account, what is a debit? Whatever you think it is.
Removal of money from your account.
Okay, there's an answer. Anybody else? And that's a good answer right there. It really is. And that's what most people think about in reference to debits. They start thinking about their debit card and their bank accounts. And the word debit is in a bank account. You have that little handy dandy debit card. But in the accounting world, the debit is merely the left side of the T account. Credit is the right side. You see left side, right side, all the way through. Debit and credit can be abbreviated to DR and CR. You'll see me do that often. Debit is an abbreviation for debitum, which is Latin, or creditum, again, Latin. So these are abbreviations of Latin words, and that's where they come from, the DR and the CR. Notice assets equals, here's my equal sign right here. Liabilities plus equity plus revenue minus expenses. So this is the left side of the equal sign. And what's on the left side of the equal sign increases on the debit side. For the most part, the right side increases on the credit side. That's how we keep our debits and credits in balance. Left side, debit, right side, credit. Expenses are the only difference because expenses decrease my revenue. To decrease my revenue or to decrease my equity, I need to debit. Expenses decrease my revenue, they decrease my equity. So that's why it debits. I also say, yeah, you can always do the, both sides. These two sides right here on the end, they increase on the debit side. And so what I did here for you guys, and this is for all my accounting students, I've got all these spaces in here, and you can go in here and you can look, you can go, okay, well, I know cash is an asset, accounts receivable is an asset, prepaid expenses, land, vehicle, so on and so forth. And I made this so that you guys can start adding your own asset accounts, liability accounts, equity, revenue, and expenses, so that when you're working on your homework and you get stuck, you can come back to the cheat sheet and you can say, okay, I've got a cash. Cash is an asset. Assets increase on the debit side, decrease on the credit side. What am I doing with this cash? And so it can help you work through the problems. So this is something here that I'm giving to you. Now, in here, I do list the contra accounts. The only one that I have listed specifically is the dividends that fall under equity. Okay. But I love this spreadsheet that I created. And here's the normal balance side. Whatever side it increases on is the normal balance side. So you saw that ledger balance was on its normal balance side of a debit. It didn't tell you that, but I could see it. Okay, do I have any questions? I'm having a good time. Nope, no questions yet. Okay, so like I said, I got a ton of videos. You are more than welcome to go in to any of these videos. I don't care if you just want to look at it to see what on earth I'm doing. You guys can come in here and watch any of my videos. They're pretty much going to be on the same line of what your McGraw-Hill is. I haven't decided if I'm going to put up your own playlist where I start adding your videos as just specifically for you guys or not. I think I am going to do that just so that you guys can access it a little bit easier. Just FYI, I'm also the advisor for the business club, so that's what you're seeing over here. This one here, I'm not going to play it, but I'm going to stop it. Okay, so yeah, you can see there's me. Okay, so there's a bunch. Why do I have somebody that I used to know by Goatee in there? I don't remember putting that in there. Somehow or another, I must have added that to this playlist. You guys can go, okay, good Lord, she's got it messed up. Okay, so this dude right here, he was talking about when Russia first invaded the Ukraine, all of the countries told Russia they couldn't enter into their airspace. And so he was discussing this as an accounting topic. And he was talking about, is it cheaper to go through a country or to go around it? And so he was going back and forth, and how much does it cost to go through these countries? And I just thought it was an interesting topic for accounting and the airline industry. And we don't normally have to deal with that at all because we're not dealing with the airplanes, of course. And we don't have to worry about entering into another country's airspace. And how much does that cost? And then the next one, and yeah, you can start hearing me going, okay, I do that okay. This is the Johnny Depp trial. And what we can't see here, we can see Johnny Depp right here, but what we can't see is there's a person that's on the stand and they are a certified forensic accountant. And he's testifying on behalf of Johnny Depp. And in here, there's a whole discussion I get into. I get all excited about that this guy went investigated Amber Heard's finances and to make a determination on some of her claims if they're true or false. So I found that really interesting. There's another accounting job right there. And so I think that's fun. You guys are more than welcome to go through any of these playlists. It gets even, let me get out of there. There's a couple on my home. I will warn you, this one here is my grandbabies opening up their Christmas presents. And I think there might be another one in there of me. This one here, I'm doing something for the Small Business Development Center. And then there's some introduction videos and whatnot. This is John Hessinger. He's with the Better Business Bureau. You guys are more than welcome to look through any of my channels information. I don't care. You might find something in there that you might like. So, any other questions?
I had one question, and
Okay,
it was
Tina.
on the it was on the practice, and it was I think it was question number 2. I don't know if everyone has the same thing or not, but it was like there were 5 ledgers to add in, and the one that was F was like the client paid $1,000 towards their account payable, and I had one side correct, but I couldn't figure out where to put the other on the other side of the equation, and I gave up eventually, but
Okay.
Yes.
One?
Yes, it's D. The company collected $1,000 cash as a partial payment for the amount owed by the client in transaction B. And I just couldn't figure out where to stick that
On D?
$1,000. Well, I couldn't figure out where to stick the $1,000.
Okay,
was very
so
confused.
so you got a customer. So we've got a customer, that's accounts receivable, and they're going to pay down what they owe us. So what's going to end up happening is we're going to debit the cash, or we're going to increase the cash, and then we're going to decrease that accounts receivable. So that's what right here. It should be, there we go, D. We're going to increase
Okay.
this cash, and we're going to credit down, we're going to credit the accounts receivable. We're going to decrease that accounts receivable because the customer no longer owes us $4,000. They only owe us $3,000. Does that make sense?
Yeah, I think I was being too literal that it had to be on the other side of the equal sign.
Yeah, you can have, so with double entry accounting, you have to have at least two entries. One has to be a debit, one has to be a credit. Chapter 1, we don't look at debits and credits. So you have to increase one, decrease something. You can have both sides of the entry happen on the assets. And that's okay, as long as they balance out. And that's what's happening here. Increase cash, decrease accounts receivable, both for $1,000.
Thank you.
Okay, did that help?
Yeah, it did. I knew it had to balance out somewhere. And I knew that, yeah, I think I was trying to make it part of the liabilities of the equity.
Yeah, don't
Instead
let
of-
accounting do that to you. Don't let those crazy old men in tall towers writing these textbooks try to confuse you, because they will try.
Yeah, the textbook is okay, but
I prefer Cengage, but I'm gonna be fine. I will be fine with this. I
but
know
will we
that,
be fine?
uh, yes, because no matter what, I will drag you through this course with, screaming and hollering. I don't care. You're going to get dragged through this course and you're going to pass it. My thing is if you do your homework, you're going to pass. If you talk to me, you're going to pass. If you ask me questions, you're going to pass. All you've got to do is your homework. Accounting is wonderful. What's 9 times 6? Anybody? Don't make me count my toes. 9 times 6.
54.
Okay, good. It is 54. How did you know that? Well, hopefully you didn't have to get out a calculator. It's because we memorized it. And so that's why I do this. It's because it's all about memorization and you get to learn the flow of it. And that's why these cheat sheets really do help out quite a bit. So I'm going to add this into your guys's, I call mine Canvas. So this would be Brightspace. Okay. Okay. Somebody else had something. How can accounting be? Okay. Okay. So you want to see more real life business. I can do that. It is kind of hard at the beginning because they want to keep it really super simple. But I do like going into different companies and finding information from them. And we can kind of do that. It might not be as great as the PepsiCo, but we can find some things to do that with. You're welcome. Okay. Okay, and I have us scheduled for another hour on Thursday. Is that good for you guys? Because, okay, I'm going to tell you guys quite honestly, this is the first class I've taught for national ever. So I am a newbie. I know how to do this with my hands tied behind my back, standing in front of a classroom. But with you guys, I'm a little bit different. Thank you. Thank you, Martin. Thank you, Tina. I just want to make sure that I hit all the concepts. And I already know that half of the concepts that you're going to want to know about that you may go, okay, I need some additional explanation. I already have a video for. I can almost guarantee it. Because you guys saw, I've got tons of videos. Okay. I am going to be doing, now Martin, do you have a problem with me creating my own company?
No problem. No problem at all. I actually asked this because I'm creating my own company right now, and I'm trying to applying all these new concepts into my accounting with the money and like the expenses and all that stuff. And I think it's really interesting to be able to do that in real time. Like, oh, I learned something and how I can do that with my business right now.
Okay. I have a habit of making up, like last year I used The Witcher and we had potions that we had to come up with, and we were buying potions and ingredients making potions. I'm sure that's not what you're doing. One time I was messed around and I did Harry Potter. I've done Game of Thrones. I've done Lord of the Rings. I kind of make my companies that way because most everybody knows about those science fiction kind of, fantasy novels, and it makes it a little bit more fun. Will you be okay with that?
Definitely. That sounds very interesting.
Yeah, wait till I come up with I'm making a wand, so I need a phoenix feather, and yeah. Yeah, but those are the easiest, and then when I do that, it's easier for me just to go through the entire accounting cycle. Because I think that's what I'm going to do. I'm going to make a video with the entire accounting cycle for chapter 2. Chapter 1 is just lets you look at how economic activity affects the accounting equation. Chapter 2 gets you into the debits and credits. And so chapter 1 will be your easiest chapter. Even though you guys don't have any room to breathe in this course at all. Combination of, okay, of lecture and examples. Okay, that is what I will do then. I will have something ready for you guys to go on Thursday. How long do your lectures usually last? I assumed an hour.
An hour,
An hour? Okay. Okay.
more or less, depending on what's going on. Like if no one has any questions, I've had instructors wrap it up at like a little after half an hour. It just kind of depends,
Okay.
but mostly an hour.
Okay. And then the other thing that I just want, and I know no everybody else is probably still at work or whatnot, or traveling home from work. Anytime you have a question, please contact me. If I'm here in Zoom, office hours, whatever it is, email, contact me so I can address your questions, so I can answer them. I have done this before. I've had students ask me questions, and then I turn around and I do their question on Zoom, or I'll do a video on it and then just post the video. And the students love that. So if I can do a question on something that you guys are all working on, that makes everybody super happy with their homework. So that's kind of just what I wanted to say right there. Okay, good. Okay, so I'll post a couple more videos. I'm gonna post that one spreadsheet. Again, I highly recommend you use it. It'll get you through this class. And then if you have, I don't know if you have to take managerial accounting after this. Usually you do. Nobody knows yet. You don't know if you're taking managerial accounting? You have it on your list. Okay.
I'm pretty sure I'm taking that.
Yeah, yeah, you have to. You've got a whole list of accounting classes, and I know what your classes are. Okay, so just use that spreadsheet. It really will help you. And again, email me on anything that I can help out any further with. Anything I can do. I'm here for you guys. I'm here for you guys to learn and to pass this class. That's my goal. Everybody passes. Okay, good. Okay, well, okay, it is 6 o'clock now. I'm gonna meet with you guys again. This is my work office, but I'll be at home on next Thursday. And so, if need be, I can stay longer if need be. Otherwise, I'll meet you guys on Thursday at 5 o'clock. And we'll go through any further questions that you guys may have, and I'll come up with some examples that I can do a Zoom video on. That should help you, Martin.
Thank you. That'd be great.
Okay, Martin, I'm curious. That does not look like English.
No, that's Chinese. That's
It's
Mandarin.
Chinese. Okay, that's
Yeah.
what I was going to ask. I didn't know. And so I was like, huh, he's got two languages going on there. You got the
Yeah,
Duolingo.
yeah, that's my Chinese name, Chinese nickname.
Okay. Now is everybody in California?
No, I'm in Taiwan.
You're in Taiwan?
I'm in Texas.
You're in Texas. What part of Texas?
Central Texas. I'm a little bit away from where all the flooding happened.
Okay. Okay, and I got somebody, I've never been to Arkansas. I've been to Texas quite a bit. I've been to Austin and Dallas and that area.
And, and I'm in Georgia.
You're in where?
Georgia.
Georgia?
Yes.
Oh, wow. Yeah, I've never been to Georgia either. Though
Oh.
my daughter, I may have to because my daughter who lives in Kansas is threatening that she's going to move to Florida. It just blows me away. Um, I'm very familiar with California. I'm very familiar with Temecula. My sister and her husband lived there with their family for a number of years. Yeah, if you guys just drive south of there, you can get to the what's that? Camp Pendleton. Yeah, we like to go swimming at Camp Pendleton. That's a good place to swim. And then my other favorite place in California is Dana Point. And that's just because they make it so friendly and so easy to go and be a tourist. It's just nicer than San Diego. San Diego is like party town. Dana Point is like old people with dog town. You can tell which one I liked. I like the dogs. So, but anyhow, okay, and so I'm in Arizona. If you guys and you can ask me questions if you have questions about stuff going on in here. If you look at the very southwest corner of Arizona, there's this town called Yuma, and that's where I live. I live on the border of Mexico and California. And I will tell you, I don't care about you, Texas. I don't care about you two Californians. We have the best Mexican food in Arizona. So, yeah, nobody's arguing the language.
I'm laughing at you. It's 100% like everyone thinks that they have the best Mexican food. That's hilarious.
Oh, here's Misty. She's saying she grew up in Phoenix Mesa and Chandler, and she agrees on the food. Yeah, it's really weird because I've had Mexican food from California, from Arizona, New Mexico, and from Texas, and they all taste very different. California has a sweet flavor to it. Ours is more savory. New Mexico is really bitter. It's got that, it's the chilies. And so they use a lot of them. And so their sauces have very bitter taste to them, in my opinion. And Texas, I don't know. Texas tastes like, okay, and I'm sorry, I'm going to say it. It tastes like gringo food, which means white people food.
That's because a lot of it's Tex-Mex. It's not actually Mexican.
Yeah. Yeah, it's just got a white people flavor. That sounds so bad. And I'm a white person, so I can say it like that. But anyhow, yeah, no, I love our Mexican food here. We have this, ours is, Sonora. You guys, California, you guys have got that Baja flavor going on. New Mexico's just got the chili flavor. So, okay. Okay, so I'm gonna go, yeah, now I wasted your time some more. I'm not gonna waste your time anymore. I'm gonna go ahead and end this. And this is gonna be your first video, because I did record this, so it should come up into your, I'll make a playlist that's specifically for you guys only. Okay?
Thank you. Good night.
Okay, we'll see you guys later. We'll see you guys on Thursday.
Thank you, Professor.
You're welcome. We'll see you guys later.
Thank you.
You're welcome. We'll see you later.